Alright. Morning, everyone. Welcome to Live Valuation. I'm Midas Moriarty. Today we're going to be covering ticker BABA, Alibaba Group. Just give me a minute to do the usual, get everything shared and up in the right locations. And then we'll get started. We've had a small spike in viewership in the last week or so. Spike meaning going from like 15 subs to 20 subs, but in a relatively short period of time, making a pretty large jump there is pretty cool. So if you're watching now and you haven't subbed to the channel and you like the content that you see today, please do subscribe to the channel, like the video, comment, all that jazz. It'd be very much appreciated. All right, I think. Oh, wait, one more thing. All right, I think that's everything. Okay. Sure. All right, that should be everything. All right, so let's get started. Go ahead and get call on if we can while I'm crunching some numbers in. They have their calls on their website, they might not. Sometimes they don't. I know I listened to the one I've already listened to by myself. I also do it off of YouTube, so I might have to just do that, but yeah.
Ladies and gentlemen, thank you for standing by. Welcome to Alibaba Group's June quarter 2020 results conference call. At this time, all participants are in a listen-only mode. After management's prepared remarks, there will be a question and answer session. I would now like to turn the call over to Rob Lin, Head of Investor Relations of Alibaba Group. Please go ahead.
Good day, everyone, and welcome to Alibaba Group's June quarter 2020 results conference call. With us are Daniel Zhang, Chairman and CEO, Joe Tsai, Executive Vice Chairman, Maggie Wu, Chief Financial Officer. This call is also being webcast from our IR section of corporate website. A replay of the call will be available on our website later today. Now, let me quickly cover the safe harbor. Today's discussion will contain forward-looking statements. These forward-looking statements involve inherent risks and uncertainties that may cause actual results to differ materially from our current expectations. For detailed discussions of these risks and uncertainties, please refer to our latest annual report on Form 20-F and other documents filed with the U.S. SEC, or announced on the website of Hong Kong Stock Exchange. Any forward-looking statements that we make on this call are based on assumptions as of today, and we do not undertake any obligation to update these statements, except as required under applicable law. Please note that certain financial measures that we use on this call, such as adjusted EBITDA, adjusted EBITDA margin, adjusted EBITDA margin, marketplace-based core commerce adjusted EBITDA, non-GAAP net income, non-GAAP diluted earnings per share or ADS, and free cash flow, are expressed on a non-GAAP basis. Our GAAP results and reconciliation of GAAP to non-GAAP measures can be found in our earnings press release. Unless otherwise stated, growth rates of all stated metrics mentioned during the call refers to year-on-year growth versus the same quarter last year. In addition, during today's call, management will give their prepared remarks in English. A third-party translator will provide simultaneous Chinese translation on another conference line. Please refer to our press release for details. During the Q&A session, we will take questions in both English and Chinese, and a third-party translator will provide consecutive translation. All translations are for convenience purpose only. In the case of any discrepancy, management statement in the original language will prevail. With that, I will now turn the call to Daniel.
Hello, everyone. Thanks for joining our earnings call today. We have delivered another strong quarter. Although the global community continues to struggle with uncertainties surrounding the pandemic, we have seen encouraging
You guys really gonna be quiet, huh?
in China due to effective management of the outbreak in vast majority of the country. COVID-19 has accelerated digital transformation of consumer behavior and enterprise operations. Alibaba is a key beneficiary of this development, with most of our businesses, including core commerce and cloud computing, have recovered and resumed healthy growth. The pandemic has fundamentally altered our macroeconomic environment and everyday life, but it has also introduced new opportunities. Digital adoption and transformation is the prevailing trend in this changed landscape, and we are confident that we can create Alibaba's future by capitalizing on the opportunities in this challenging environment, just as we did in 2003 during SARS and in 2008 during the global financial crisis. In the 12 months ended June 2020, annual active consumers on our China retail marketplaces reached 742 million, representing a quarterly net increase of 16 million. Mobile MAUs on our China retail marketplaces reached 874 million, an increase of 28 million since March. These numbers reflect Taobao's continuing strong consumer mindshare, healthy user stickiness, and engaging user experiences as the world's leading consumer community. Tmall online physical goods GMV, excluding unpaid orders, grew 27% year-over-year, with all major categories growing at a similar or faster rates relative to December 2019 quarter. Our unparalleled product offerings and engaging user experiences contributed to higher purchase frequency as well as higher average spending per customer across all all city tiers that increased both year-over-year and quarter-over-quarter. In terms of user acquisition, we continued to increase our penetration in less developed markets. Taobao Deals, our new mobile app targeting value-conscious consumers, reached 40 million MAU in June. The disruption in international tourism presented an opportunity for our import commerce business. Tmall Global, the leading cross-border import platform in China, grew over 40% year-over-year in GMV, excluding unpaid orders. Looking forward, our China retail marketplaces will focus on the following areas. Number one, continue to drive user acquisition, especially in less developed markets, and work towards reaching our midterm goal of serving more than 1 billion Chinese consumers. Number two, continue expanding our product supply, especially in categories currently under-penetrated by e-commerce. And number three, continue to enhance the shopping experience and the path to purchase on our platforms through new content formats such as live streaming and short videos. Our investment in new retail over the past several years have well positioned our grocery business, Freshippo, Tmall Supermarket, and Taoxianda to capture unprecedented growth opportunities during the pandemic and continue to see healthy growth momentum in the past quarter. More than 60% of Freshippo's GMV came from online, and the stores which have been in operation for more than 1 year enjoyed double-digit same-store growth. Tmall Supermarket half-day delivery services, which leverage Sun Art's store-based inventories, gained widespread popularity among consumers and helped Sun Art increase consumer reach and create incremental sales. We enabled approximately 15% of Sun Art's total revenue
What did I do?
in the June quarter.
Online.
Ele.me successfully rolled out an important branding upgrade in July. The new brand proposition, "Anything you love, we deliver," represents the transformation of Ele.me from a food delivery platform into a comprehensive digitalized local service platform. In addition to food and beverage, Ele.me now also delivers everyday necessities such as grocery, fresh produce, medicines, and flowers from local merchants. In the June quarter, Ele.me achieved positive unit economics.
Alright, I screwed up something else up here. Where did I screw up?
Operational efficiency.
Mm-hmm.
It also received positive year-over-year GMV growth.
That one's correct.
Signaling healthy recovery of the business. We also saw promising early-stage results in Ele.me's strategic cooperation with Alipay. During the past quarter, approximately 45% of new customers ordering
That's
food
correct.
delivery on Ele.me was contributed by the Alipay mobile app. We will further deepen the cooperation.
Oh, I'm missing that.
We
Okay.
believe there is significant potential for value creation by combining Ele.me and the power of entire Alibaba ecosystem to capture opportunities that will emerge from the ongoing digital transformation of the food and beverage and the retail industries. We will continue to invest in this area.
There we go.
Lazada continued to show strong progress in the last quarter, with order volume growing more than 100% year-over-year. The pandemic has significant impact on many Southeast Asian countries, and it has converted many consumers into online shoppers. We believe
Love how on the previous income statements I already did for fiscal 21 and 22, they actually had the weighted
over the long term,
ADSs and the per share, but here they're only doing the ADS, which is
continues to be the
fine
strategic
for
priority
people who are doing the valuations in USD, I guess, but
in this highly competitive region, with Lazada's new leadership in place,
no love for RMB in 2019.
sustainable digital business,
Whatever, just
leveraging
multiplied by 8.
Alibaba technology to serve local consumers and business partners. During the June quarter, AliExpress, our cross-border export marketplace, saw order conversion and delivery time negatively impacted by challenges in cross-border logistics, but the situation has started to improve in July. Alibaba.com and 1688.com, two of our oldest businesses, saw new market opportunities this year. Many international wholesalers have turned to Alibaba.com to source products from China, as global supply chains were disrupted and Chinese factories were the first to resume production. In June, daily active buyers on Alibaba.com increased over 100% year over year. 1688.com also saw more than 50% year over year growth in daily active buyers as a result of increasing number of SMEs, especially small retailers looking for supply as Chinese economy reopened. The pandemic has also transformed the way enterprises work, accelerating demand for cloud infrastructure and services. According to IDC's latest report, Alibaba Cloud maintained its position as the largest public cloud service provider in China, which is a testament to Alibaba Cloud's strengthening market leadership. In the June quarter, our cloud computing revenue grew 59% year over year in sectors such as internet, financial services, consumer retail, and public services. Alibaba Cloud not only provides infrastructure as a service, but also develops industry-specific technology and business solutions to address real-world application requirements for our customers. As offices and schools reopen in China, DingTalk's DAU moderated from the peak level, but remain over 100% higher than pre-COVID-19 levels. Approach to work and education have changed fundamentally, and DingTalk will be the important digital collaboration platform for working and learning moving forward, connecting all industries to services on cloud. For our digital media and entertainment business, Youku's daily active subscriber base increased by more than 60% year over year during the quarter with the release of popular TV series and variety shows. In July, cinemas started to gradually reopen in
Pretty
China.
significant acquisitions in 2019.
Has been preparing for business to resume. We are closely monitoring the pace of recovery. Recently, we decided to stop the operations of UC Web and other innovation initiatives in India after extensive review of the business. We don't expect it to have a material impact on the group's overall financial performance. Today, we face uncertainties from not only the global pandemic, but also increasing tensions between US and China. As the world's largest e-commerce platform, Alibaba's primary commercial focus in the US is to support American brands, retailers, small businesses, and farmers to sell to consumers and trade partners in China, as well as the other key markets around the world. We believe global trade will continue.
Repayment of debt as well.
Of our mission.
Usually in a year where they have a large acquisition, you don't usually see repayment of debt. Usually that's when you see the issuance of debt. But I suppose they issued a lot of debt the next year, so maybe they just kind of did that in a lopsided kind of way.
In U.S. government policy towards Chinese companies, which is in very fluid situation. we are assessing the situation and any potential impact carefully and thoroughly, and will take necessary actions to comply with any new regulation. Now, I will
Also,
turn it
significant
over to
share
Mike,
repurchases in the
who
same
will
year.
walk you through the details of our financial results.
Thank you, Daniel. Thank you, everyone, for joining us tonight. I'd like to review our financial highlights for June quarter. We delivered a very strong start to our new fiscal year. Mobile MAU in June was 874 million, quarterly net adds of 28 million, and annual active consumers was 742 million, quarterly net adds 16 million. We continue to acquire new users and consumers from less developed areas of China, reflecting our ongoing success in broadening product offerings to meet different demands. The purchase frequencies and spending of our consumers coming from less developed areas also continue to improve. Our total revenue was 154 billion RMB, up 34% year over year. The increase was mainly driven by the robust growth of China commerce retail and cloud computing businesses. Our domestic core commerce business has fully recovered from the COVID-19 impact and is showing strong growth. Cloud computing revenue grew 59%. Our free cash flow in June quarter increased by 39% to 36 billion RMB. Our strong profit growth and cash flow enables us to continue to strengthen our core business and invest for longer-term growth. Now, let's move on to revenue in details. China commerce retail grew 34% year over year. Customer management revenue grew 23%, primarily due to increased revenue contribution from search-related revenue as well as new monetization formats. This new format includes recommendation fees and things like live streaming. We see number of paying merchants and spending per merchants both increased. Commission revenue was up 17%. Commission revenue growth was primarily driven by solid 27% growth in Tmall physical goods paid GMV. The gap between the growth of commission revenue and Tmall physical goods paid GMV growth was mainly because of faster growth in FMCG and consumer electronic categories that have lower blended commission rates, and also because of our initiatives to support our merchant customers, including our waiver of annual service fees for first half of 2020. Revenue from Cainiao grew 54% year over year. This was primarily caused by the fast growth of our cross-border businesses such as Tmall Global, supported by increased adoption of fulfilled by Cainiao services. Revenue from local consumer services was 7.1 billion RMB, up 15%. This is due to an increase in average order value and ongoing recovery in on-demand delivery GMV growth. Unit economics per order for the non-demand delivery businesses was positive during the quarter, reflecting improved delivery network efficiency as well as enhanced marketing efficiency that leverage our consumer insights technology. This has led to further narrowing of losses year over year for the local consumer service. Our merchant acquisition continued to accelerate for this local consumer services. Ali Cloud continued strong growth, so we show 59% year-on-year growth in revenue, and at the same time, the losses continue to be narrowed. So our average revenue per customer continued to improve, and all the cloud services across are growing very well. So for DME and innovation initiatives, one thing worth to mention about is that our online gaming business, which was developed from acquired businesses, has been growing well. So it is not recognized as part of the DME segment. It grew into sizable revenue and user scale and was moved out of the incubator, which is the innovation initiative segment. Let's take a look at our cost trends. Cost and expense growth generally kept pace or was lower than revenue growth, reflecting ongoing improvement in operating efficiency. The savings from operating efficiency improvements were reinvested into strategically important businesses with strong long-term growth potential. Let's move to segment reporting. We continue to enjoy solid revenue growth by segment. The strong profitability coming from the core business enables us to invest for the future. For the core commerce segment, market-based core commerce profitability grew strongly to 55.5 billion RMB, up 8.7 billion RMB year-on-year. Developing businesses such as local consumer service, Lazada, New Retail, and Cainiao all showed strong operating performance and improved operating efficiency. The combined losses of these development businesses was narrowed by 1.5 billion RMB to 4.2 billion RMB, which contributed to the 25% EBITDA growth of the overall commerce segment. Cloud computing, we talked about the loss margin will narrow to 3%. For digital media and entertainment, we continue to focus on reducing losses in Youku through content cost control while increasing paying subscribers growth. Losses reduced by about 1 billion RMB year-on-year to 1.3 billion for DME segment. Innovation initiatives and others, the increased losses were primarily due to our investment in DingTalk businesses and also AutoNavi for the user expansion as well as the technology research and innovation. So overall, our business continued to deliver strong profit growth with improving efficiency. At the same time, we use our incremental profit to continue to invest back to our business. So June quarter free cash flow and CapEx, our businesses overall continue to show strong profitability and cash flow. As of June 30th, cash equivalents and short-term investments were 382 billion RMB, which is over $50 billion. For the quarter, free cash flow was 36.6 billion RMB, which increased by 39%, mainly due to our robust profitability growth. The June quarter other financial metrics, the share of results of equity method investees in the quarter was 349 million. We record our share of results of all equity method investees 1 quarter in arrears. Thus, for this June quarter earnings, we're recognizing our investees' March quarter share of results. But you can tell that the Ant Group has performed well in March quarter. The COVID-19 pandemic has caused widespread disruption to the economy, which has and could continue to impact our investee companies. So June quarter GAAP to non-GAAP net income reconciliation is shown on this page, and it's self-explained. So looking ahead, China has managed the pandemic and the whole process was managed very well, and the economy recovered very quickly. So our group has benefited from the overall China's recovery, as well as the accelerated digitization of our customers. Our core and new businesses all developed well. This allows us to have multi-engine drivers for the revenue and profit growth. Our strong profit growth will make it possible for us to reinvest. We will continue to reinvest our incremental profits back to our businesses and continue to expand our market leadership in various areas. Before our Q&A session, we would like to announce that our Investor Day will be held on September 28th to 30th. This time, it will be a virtual one due to the pandemic, the limitation on travel people. So we hope to provide in-depth business updates as we did in previous investor days. Details will be posted on the investor relationship section of Alibaba Group's website. Now we can open up for questions. Thank you.
Ladies
Hi
and
everyone, for
gentlemen,
today's call, you are welcome to ask questions in Chinese or English. A third-party translator will provide consecutive interpretation for the Q&A session, and our management will address your questions in the language you asked. Please note that the translation is for convenience purpose only. In the case of any discrepancy, our management statement in the original language will prevail. 大家好，今天的电话会议欢迎您用中文或英文提问。我们会有第三方工作人员提供实时的翻译。我们的管理层会按您提问的语言回答您的问题。翻译目的是方便大家理解。如有任何异议，请以我们管理层原始语言所做的程序为准。Operator, please connect speaker and SI conference line now. Please start Q&A session when ready.
Ladies and gentlemen, we will now begin the question and answer session. If you wish to ask a question, please press *1 on your telephone now and wait for your name to be announced. If you wish to cancel your request, please press the pound or hash key. To give more people the
I was hoping the analysts have their volume set to their appropriate level. They never do.
Again, it's *1 on your telephone and wait for your name.
It was either too loud or too quiet.
Your first question comes from the line of Eddie Leung from Bank of America. Please ask your question.
Thank you. 谢谢管理团队。我们看见几个大的电子商务平台，他们的用户数包括你们都已经蛮大，所以蛮大可能同一个消费者他可能都会在几个平台上面购物。所以我想问一问你们想一想
Words in a language I don't understand, but that's a kind of a different
什么样的情况，什
problem.
么样的产品比较大机
It's
会
not really on them.
大大上的买了？好，是这样子，谢谢。
That's on me for not knowing my own
Thank you.
Mandarin.
My question is, given the existence of several large e-commerce platforms in China in parallel, all of them already being at considerable scale, meaning that there are bound to be some consumers who are on multiple platforms simultaneously. The question is, in the future, what consumers, under what circumstances, and with respect to what products do you see specifically coming to Alibaba's platforms?
好，我来回答这个问题啊。这个其实对阿里巴巴来讲，我们的这个 China Retail Marketplaces， 我们其实为消费者提供的是一个综合的一个服务体验啊，这里包括丰富的商品，包括有竞争力的价格，包括完善的这个消费者服务啊，这个包括售前、售中、售后的服务，所以它是一个完整的一个用户体验，所以它能够满足不同消费者在不同的时刻，在不同品类的这个要求，所以这个我们相信这个阿里巴巴的平台仍然是中国消费者首选的我们的消费平台我们也为此会继续的去努力。
Thank you. I will answer that question. With respect to Alibaba's China retail marketplaces, for consumers, what we offer is an integrated service experience with the widest and richest product assortment, with highly competitive pricing, with excellent service that's provided pre-sale, during sale, and post-sale. And therefore, we're already positioned to meet the needs of all kinds of different consumers in different categories. That's why Alibaba is the #1 choice for online shoppers in China, and will continue to keep working to keep that the case.
从商家的角度来讲，这个我们既有这个天猫的这样的品牌的指引这个消费者能够直接购买品牌商这 这个直接的供给的商品和特别是新产品。同时我们也有淘宝这样大量丰富的来自各种渠道的商品和这个今天这个来自于原产地、来自于工厂的产品、来自于各地的农产品。所以对消费者来讲其实整个满足他们的需求是可以满足他们不同的需求。这个第一是满足不同的层次的消费者的需求，第二是满足消费者在不同的这个品类当中的这个需求。在有些品类即使是这个有钱的消费者，他也希望能够更这个价格更便宜更好。但是在有一些品类，他们可能更关注服务和品质。所以在这么巨大的这个用户量下面，我们希望为不同的消费者提供不同的选择，满足他们不同的需求。
Secondly, from the merchant perspective, we have Tmall, where brands make their goods available to consumers who can buy goods, in particular new goods, directly from brands. We also have Taobao, where goods are made available through many different channels to consumers, including now with direct sourcing from origin, including of agricultural and food products. So the fact is that we can meet a whole range, the full range of different needs and demands from consumers, both in terms of different categories and products, and also in terms of the range. You can have some consumers who are more affluent, but they could be
took on significant debt in 2018, so it could be that the debt they took on in 2018 is actually what they used for the business combination in 2019
is to continue to provide
instead of just doing the lag like I was kind of suggesting before.
In all of those different areas.
谢谢 Daniel, thank you.
Your next question comes from the line of Alicia Yap of Citigroup. Please ask your question.
Hi, good evening, management. Thanks for taking my questions and congrats on the solid results. My question is on your international retail business, especially Lazada. What is your latest view for the e-commerce involvement in Southeast Asian regions? What are the differentiated approach that you have, your competitive strengths, and any areas that you think there are rooms to change or improve that you foresee how the landscape will evolve, as compared to China and in the region, and how Lazada will position that. Thank you.
好，晚上好，感谢你们接受我的提问，也祝贺集团本季度又是取得了非常出色的业绩。我的问题呢是有关于国际零售业务，特别是 Lazada。想知道你们对于电商业务在东南亚的未来发展有什么样的看法？然后阿里会采取什么样的一个跟别家不同的有差异化的这个战略和方法来参与这个市场的这个变化？然后你认为这个市场的变化会与中国或者是区内其他市场有什么样的不同？那么阿里的 Lazada 又会做出什么样的特殊的定位？
Thanks, Alicia. Let me answer this question. I think, as I said in my script, Southeast Asia market is our strategic priority for Alibaba's globalization strategy. And I think when we look at our Lazada's operation, we expect to build a more tech-driven, AI-driven, sustainable business. Actually, today in this market, competition is very extensive, and people invest and even subsidize the buyers, sellers, even shipping fees, and trying to get the short-term growth. But we strongly believe we need to build a long-term sustainable business. And so our advantage is first is about Alibaba technology infrastructure, and especially our experience and know-how and technologies in the AI and in the search and recommendation and the supply and demand match mechanism. I think this is our big advantage. And after Lazada's business transformation, we are also actually we are today gaining the benefit from this technology implementation. And second, I think we as part of Alibaba's operation, we have a big advantage to supply the Southeast Asia market with the goods from China and from other countries. Today, actually, Lazada is not an isolated business to Alibaba. Actually, this is part of Alibaba global network, and we are trying to sell not only from local to local, but also China to Southeast Asia and other countries to Southeast Asia. And at the end of the day, I think we are trying to build a global network and to sell anywhere, buy anywhere. And the third one, I think today for Lazada, we also have different segments. We have our large mall for brands operation and which provide a high quality product directly from the brands and with good fulfillment delivery services. We have our large Lazada marketplace, which is more like a small B2C or even C2C. And as I said before, we have like large global, which is cross-border business from China and other countries. We will continue to invest and enhance the position of each of the marketplaces and provide an integrated experience to our customers. And as to the difference, between China market and Southeast Asia market, I would say, I think maybe the biggest difference is that actually in Southeast Asia, social network is very, very popular, and there are a couple of very important players in this market. And merchants also loves to interact with customers via social network. So how to leverage the power of social networks, I think it's a very important goal to us. So actually we have done a lot and we will continue to do further. Thank you.
好，谢谢您的问题。在我刚才宣读的准备好的发言当中，也是讲到了东南亚的市场是阿里巴巴集团国际化战略当中第一个最重要的、最具战略性的这样一个市场。那么在我们 Lazada 这个运营当中，我们会就是使用我们的科技，使用我们的人工智能 AI 来打造一个可持续的这样的一个业务来发展。我们已经在广泛的应用我们集团所有这些相关的这个技术。那么在东南亚应该说是竞争很激烈，有其他的这个公司，他们甚至在做各种补贴买家、补贴卖家，甚至在补贴物流的方面。但是阿里巴巴的心态是坚定的，我们希望打造长期可持续的这样的一个业务。那我们的优势一个是我们的技术科技方面的基础设施，还有我们的很多专有知识围绕人工智能、搜索推荐，还有在需求和供给之间的这个撮合匹配等方面这都是很成熟的科技，是我们的一个巨大的优势。另外的话呢就是说 Lazada 自从这个改制之后已经在受益于我们这样的一些高端的科技。那么第二就是说这个我们阿里巴巴对待 Lazada 并不是把它作为一个孤立的业务来看待，而是作为我们阿里巴巴这个系统当中的一个组成部分。所以我们希望它能够支持呢这个本地对本地、中国对东南亚，还有其他国家对东南亚的这样的全方位的一体化的这个交易模式。阿里巴巴的决心就是打造一个全球化的网络，任何人在任何地方可以进行买和卖。那么第三点就是说Lazada 它也是覆盖不同的市场细分，它有这个大型这个商场它是以品牌来跟这个消费者互动的还有Lazada Marketplace 这个等于是一个小企业小弟 to C， 甚至是 C to C 这样一个市场。那么还有它的 global 就是中国等其他国家可以利用这样一个市场。那么我们会继续投资发展所有这些不同的市场板块，为客户提供优质的一体化的这个体验。那么最后您还问到东南亚市场发展和中国有什么最大的不同？我认为最大的不同在于东南亚这个社交网络的这个普及度。东南亚的这个消费者非常喜欢用社交网络，包括跟商家来进行互动。所以我们的一大课题就是如何利用好社交网络的这个力量来发挥作用。我们这方面已经做了很多，未来还会继续投入。
Thank you, Daniel.
Your next question comes from the line of Lily Wong of HSBC. Please ask your question.
Good evening, management. Congrats on a very successful quarter and also on a successful June shopping festival. Question is on the Taobao deals. We saw news that you soon launch a short video channels to strengthen the ecosystem. And while Douyin on the other side also talking about expanding e-commerce business, making it closed loop. So question is, how do we differentiate when we talk about this live streaming and short video, I guess in the terms of like social commerce, and how do we better help merchants to sustain the relationship longer with customers? And so far, do you see live streaming as cannibalized or incremental to merchants' marketing budget on Alibaba? Thank you.
好，谢谢您接受我的这个提问，感谢祝贺你们本季度表现强劲。
Wow, that's a dramatic increase in the depreciation and amortization.
问题呢是关于这个淘宝的特价版淘宝 Deals， 知道
They definitely are picking up
视频
lots of assets.
生态系统。也知道抖音呢，他们在考虑呢增加这个购物消费的这个内容，那么从此形成直接的这种竞争。那么想要知道直播还有社交购物消费这一方面你们怎么看的？然后直播你认为它是可以带来增量的这个消费，还是它是存量消费当中的又一个渠道？谢谢。
Okay, I think first of all, Taobao Deals targets value-cautious customers by offering high quality products, high quality and value for money products. So I think the target customers for Taobao Deal actually is very, very clear. And as part of the consumer experience in Taobao Deal mobile app, we launched the short live streaming and short form video. I think, but this is not a complete user experience. It's part of the consumer interface, but it's I think that we are trying to give factories and suppliers a tool to manage their customers, and also trying to give customers different experiences in their consumer journey on Taobao Deal. But I think the primary goal is still segment the Taobao Deal with the value for money products and low-end customers. This is very clear. And the short form video is just a consumer feature, and this will highly integrate with the whole entire consumer journey.
Another significant acquisition.
And in terms of the live streaming, activities in other players, including Douyin, I would say.
Yeah, so if we look over the whole trail of adjusted net capex, which includes capital expenditures and acquisitions after adjusting for depreciation, so it's netting out the depreciation on those as well. Then you can see 2017 pretty significant, 2018 still there but not as significant, 2019 pretty significant, 2020 a net negative because of depreciation, and then the past 12 months also a net negative because of depreciation. So in 2020 and 2021 their capital investments were slowed down to the point of shrinking actually, by depreciation measures anyway.
They are storefront on our platform, and they operate they trying to bring all the consumers, customers from.
You could say that they've slowed down in investing in their company since 2019. Maybe that'll change in the next year. For the revenue growth that a lot of people want for it, that they had better make another big acquisition or make another big year of capital expenditures. But their capital expenditures have actually grown over time pretty significantly, at least from this pretty low year right here. We've grown and then grown again, but this was the peak in 2019 as well. So in 2019, that's part of the reason why they had such a huge year then, and it's been a lull since then, is because they had a huge amount of capital expenditures in 2019, plus a huge acquisition in 2019. And so both of those probably depreciated strongly in the years since then. While they did keep their capital expenditures relatively strong relative to the 5-year trend there, but it's not as high as it was in 2019, and in neither of these years did they have overly significant acquisitions. So that's great for their cash flow, but that's not great for growth.
Whole solution, entire solution, we provide to our merchants to manage their customers on our.
If you want to see a company grow fast and very large, then they need to have not impressive cash flow. Impressive cash flow comes after the revenue growth comes, not before it.
好的，那么我想淘宝 Deal 淘宝特价版它呢是针对对价格呢比较敏感的客户，给他提供这个高质量性价比高的这样的一个产品。
They have impressive cash flow now from their previous investments, but not from their current investments. They need to take that cash flow and they need to reinvest it in their business. Is what they need to do.
但是这些呢，并不代表一个完整的用户体验，它只是用户体验当中的一个部分，也是我们给到商家更多工具来管理他们的这个客户，那么可以结合多种不同的这个工具来进行客户的这个运营所以应该说这个短视频也好，还是直播也好，它是一个功能，一个一体化大整体当中的一个工具，那么可以丰富这个消费者在淘宝特价版 APP 当中的这个消费旅程。那么说到抖音或其他平台他们的这个直播，我想对我们的商家而言，这个直播呢有点类似于是活动营销它是一个整体运营当中的一个部分，但是毕竟没有人可以呢每周7天每天24小时不停的去直播所以的话呢很多商家他会利用直播来做一些促销，来做一些获客，但是除此之外他还需要非常稳定强大的一个平台支撑它日常的这个运营，所以很多的商家就是选择利用我们这样的一个平台来到这个淘宝他也确实发现到淘宝来开店铺
issued a significant amount of debt in 2017 to do that acquisition probably, as well as they issued shares to do that. But they also bought back shares, so looks like they probably issued the shares in order to make the acquisition and then turn around by the end of the year and bought back a significant amount of them. On net, they issued still a small amount. If you're watching and you're enjoying the content, please like the video. And if you're not already subscribed to the channel, please subscribe.
Operator, next question, please.
In the call, yeah.
Operator, next question, please.
Went silent there for a minute.
Your next question comes from Mark Mahini. Please ask your question.
Okay, thank you. I just wanted to ask about the Ali Cloud business. Can you talk about the sustainability of growth there? Are there particular industry verticals that you've recently seen be more aggressive in terms of cloud deployments? And just talk about what's happening in terms of the competitive dynamics, whether pricing remains relatively consistent, you're seeing more aggressive pricing in the industry. Thank you very much.
好，谢谢您的问题。谢谢你接受我的提问。我的问题是关于呢这个阿里云这个业务，想知道它现在这个增长是不是可持续？然后呢，在哪些垂直的行业部门你现在看到这个上云的步伐是比较快？然后总体云市场的竞争格局现在怎么样？定价格是不是很稳定，还是价格有这个竞争的压力在
？Cloud is a fast-growing business. If you look at our revenue breakdown, obviously cloud is enjoying a very fast growth. And what we see is that all the industries are in the process of digital transformation, and cloud is a very important. Moving to the cloud is a very important step to all the industries, and we strongly believe that sooner or later all the business will move to cloud. So that's why we do see the fast-growing growth. We do believe the fast-growing will continue in near and mid-term. And this, even in the longer term, this will totally change the how enterprises work and how business collaborated. And in terms of the industry development, even all the industries they are embracing the cloud, but I think that the people who take the first the move fastest first is from the internet company, because all the internet company, all the internet operation actually could be powered by cloud. So internet is a very important sector, but in recent months we do see the fast growth from other sectors, including like financial services, like consumer retail, and even like public sectors like power and utilities, so on and so forth. So, but we do believe it is still in an early stage, and as I said before, and we don't want to just provide a cloud in terms of a infra services. If we just do it as an infra service, as our services, then price competition is inevitable. And then all the cloud service is more like a commodity business. Today, Alibaba's cloud is cloud plus intelligence services, and it's about cloud plus the power of the data usage. So that's why we work hard to develop industry-specific solutions with IaaS and PaaS services together with our SaaS partners, and we will continue to do that to enhance our market leadership.
好，那么实际上云是一个 增长非常快的一个业务板块。如果来看一下我们的收入构成从中就可以看出它是增长很快的。那么实际上所有的产业都在进行数字化的这个改造。那么上云对任何产业来讲都是一个非常重要的一步。我们坚信所有的产业、所有的部门都会来上云。所以我们相信，就是在近期和中期而言，我们会继续看到快速的增长。那么在长期来说，我们认为上云会彻底改变企业工作的方式，还有企业协作的这个方式。那么谈到产业的发展，所有的这个产业不同的行业都在上云，但确实有些行业它的动作更快。那么通常动作最快的最愿意率先来上云的是互联网的公司。因为互联网企业它的很多业务都很容易就可以从云端上来开展。但是最近我们确实也看到其他一些行业，他们上云的步伐也是很快，包括有金融服务业，包括呢有这个消费针对消费者的零售业，还有一些公共部门的服务，包括电力这个等设施的提供。但是这些还是处在早期。我们认为呢，我们的云的服务它绝对不仅仅是一个作为基础设施来提供，所谓 IaaS。因为如果是纯粹作为 IaaS 来做的话呢，那么价格方面的竞争一定是非常的激烈，我们的产品也无法实现差异化。因此阿里，我上次也强调过，阿里的一个基本的主张是云加智能要结合数据的这个力量。因此的话呢，我们在大力开发各种不同垂直行业的解决方案，和我们的这个合作伙伴共同合作，然后以这样一种方式来这个维护和提高我们的市场领先地位。
Yeah, Mark, this is Maggie. To supplement what Daniel said, regarding your question on the competition in cloud computing, our peer company who also has cloud businesses, they report their results as well, and I think you can do the comparison. Although none of these companies have disclosed the cloud computing revenue and the profitability, the P&L, the EBITDA, like we do, but you still can, figure out from, derive the cloud revenue from them. Obviously, we're the largest in terms of the business size, so we reported more than 12 billion RMB revenue in 1 quarter's time. This is more than double of our nearest competitor, and we're growing faster. Just give you a sense of the.
好，谢谢，我是 Maggie。我是 Maggie， 然后我想补充回答一下刚才您问到的关于竞争对手的这个问题。那么当然了，我们有同业的公司，他们也有云方面的业务，你也可以去做比较、做分析。虽然他们不像我们会具体披露营运指标，包括 EBITDA 等等，但是你们可以去推算一下，然后自己做一些比较。显而易见的是，阿里云是云市场最大的，我们1个季度就实现120亿人民币的收入，那么这个规模是仅次于我们第2大的公司的2倍多，而且我们还在快速增长。
I would also like to add that if you compare, to give you a global comparison of the China cloud market and the U.S. cloud market, based on the third-party studies that we've seen, the China cloud market is going to be in the somewhere in the $15-20 billion total size range. And the U.S. market is about 8 times that. So the China market is still at a very early stage, and we expect, based on what we've seen of our customers, as well as observing the whole market growth, the China market is going to be a much faster growing market in cloud than the U.S. market. So we feel very good, very comfortable to be in the China market and just being in an environment of faster digitization and faster growth of usage of cloud from enterprises because we're growing from such a small base, about 1/8 base of that of the U.S. market.
我是 Joe， 我也想补充一下，就是说，如果拿中国市场跟国际市场尤其是美国市场来做一个比较的话，我们从看到的很多分析的报告就知道，中国的这个云市场大概会是在150亿到200亿美元这样一个规模。那么美国的云市场呢，已经是这个数字的8倍又多因此的话呢，中国市场现在是处在一个初期的发展阶段。那么我们观察我们的客户，观察中国的这个市场，我们相信中国市场一定会有快速的发展，它的速度会比美国更快。因此的话呢，我们现在在中国市场做云业务，我们是感觉很好的。我们认为处在这样一个环境也非常好，因为它无论是数字化的这个推进速度，还是云服务的这个渗透率提高的速度都是很快，而且原来的基数很低等于是美国的1%而已，所以未来的前景还是非常广阔的。
Operator, next question, please. Operator, next question. Thank you.
Thank you. Your next question. Thank you. Your next question comes from Youssef Squali from Truist. Please ask your question.
Great, thank you, and good morning. Two very quick ones. First, it seems like the recovery has been somewhat uneven between higher income and lower income consumers. Daniel, I was just wondering if you believe that as a result of this pandemic, there has been a structural impact on lower income consumers, and maybe how long it may take them to recover over time. And second, Maggie, any update to the guidance that you had given the last call about the total revenue in fiscal 2021 of more than 600?
Decent acquisition in 2016 as well.
好，谢谢。早上好，提两个很短的问题。第一个问题就是似乎我们看到这次的复苏当中，那么高收入和低收入消费者他们的复苏速度是不平衡的。那么首先想问 Daniel， 你是否认为这次的这个疫情影响对低收入的消费者是不是带来了结构性的影响？然后如果是，他们的恢复将需要多长时间？那么第二个问题想问 Maggie， 就是对于上次给我们的2020年收入的这个指引。
This year's financing activities is a mess. Issued a bunch of shares, probably to do that acquisition.
Quickly on this revenue guidance, Yusuf. So we grow revenue for June quarter by 34%. We remain the guidance unchanged, although we're very confident in our business because this is just the first quarter of this fiscal year, and there are still 3 more quarters to go. So we'll update you at due course if there's any updates. Thank you.
好，谢谢。我先回答一下关于这个收入指引方面的问题。刚才已经公告了，6月份季度我们的收入是增长34%。我们现阶段对之前做出的
And they issued debt, so they issued shares and debt pretty significantly in this year.
今年才过去了41亿，还有3个季度。那么如果今后需要做更新的，我们会及时通知。
And unlike the last time when they issued a decent amount of shares, they didn't really do much buybacks this year. They did a tiny amount, but not really.
I think, generally speaking, the recovery of Chinese consumption, I think, actually stay strong. As China is the first country who, moved out of the pandemic, and all the situation is almost under control, except for a couple of cities. So that's why the recovery of the consumption, I think, is quite promising. And if you look at our number and our China retail market business reported a very strong growth in this quarter. Most important thing is that the ASP for the consumers in all city tiers actually grow, and they buy more frequently and they consume more. But if you look further, I agree that for the low-income people, I think they are if you look at their consumption behavior, actually there is still some uncertainties because of they are actually more cautious about the future of the economy. As you know that in China, a lot of low-income people from the service sectors. And today, I think as compared to the physical goods consumption, the consumption in service sectors still takes some time to fully recover. And the employment in this, service sector also need more time to recover. So I think this will bring some sort of like uncertainty, for these low-income groups.
好，那么关于这个消费者人群的这个细分，我想首先说的是，总体而言，中国消费的复苏是强劲的。中国是世界上第一个能摆脱疫情影响实现强劲复苏的国家。现在全国各地疫情应该说基本上得到了很有效的控制，除了少数几个。
Sorry, I had to close my door. Roommate came home.
那么在这个消费的复苏方面，我们看到的情景是令人比较乐观的。刚才也已经公布了我们中国的零售平台这一季度的这个增长是强劲的。而且很重要的一个数据就是在所有层级的城市当中， ASP 比单价都是提高了，购买频次也是提高了，所以人们是买了更多而且买得更频繁。那么如果再更具体的来看我也能够同意说，低收入的这个人群他们有一部分的消费可能依然受到一些不确定性的因素的影响，因此他们可能对于某些消费而言，他会更加慎重或者是对未来的经济他会更加的这个谨慎。因为现在很多这些人群他是就业于服务部门，那么服务部门的这个完全的复苏可能还需要过一段时间，那么这个也会部分影响到一些人群的这个服务方面的这个消费。
Operator, next question, please.
Your next question comes from the line of Gregory Zhao of Barclays. Please ask your question.
管理层您好，非常感谢提问机会，同时祝贺您强劲的业绩。我的问题是关于咱们中国互联网的话，在过去这些年涌现出以阿里巴巴为代表的 全球领先的巨头，在互联网的应用层面，阿里巴巴以及其他的中国互联网公司已经全面领先了国际上的竞争对手。但同时在一些基础研究领域，比如说操作系统、半导体芯片等制造方面，中国还处于相对落后的情况。所以想问一下阿里巴巴在这些关键性的互联网的基础研究领域有哪些长远的布局和计划？同时这是否意味着今后阿里巴巴会在全球范围内的人才引进会有所加强？谢谢。
Thank you very much. I'm delighted to have the opportunity to ask the question. Congratulations on a strong quarter. So we know that China has produced a number of globally leading internet giants, with Alibaba as the most typical example. And these companies, including Alibaba, are at the front of the entire world in terms of developing all kinds of applications for the internet. But when it comes to things like operating systems or even semiconductors and chips, China lags behind the rest of the world. So my question is, does Alibaba have any longer-term plans to invest in that kind of key infrastructure? And as part of that, does Alibaba have plans to hire more talent from international markets?
谢谢你的问题。对阿里来讲我们一直这么多年一直是以市场导向和用户导向来发展我们的业务在这个中间，我们对关键技术的投入也是长期的，也是这个坚定的。这个但是我们始终坚信，就是所有的技术最终还是要面对市场我们一直是用消费者业务来牵引包括今天走向云的市场，也是以这个不是简单的这个云服务的提供，也是以这个最终为企业在真正的这个改善经营管理上面方面能够提供服务，所以这个是我们这个坚定的这个方向。我们也有对长期的这个技术的投入包括在通过我们的达摩院我们也在进行很多的研究。
This is the registration year. That's the real question.
这个 research and development 必须高度的结合。
Is what was the first
为商业为社会创造真正的
date?
价值。
Okay, well that works. That checks. That's good.
Thank you. Alibaba has always been committed to market-oriented and user-oriented development, and we continue to invest for the long term in technology with those objectives in mind.
Shouldn't have anything for this.
Must be tightly integrated with the market to meet needs in the market. We've done that with consumer-facing technology and now also with the cloud, where we're not just providing infrastructure, but are looking for ways to leverage on the cloud to help businesses enhance their operations and become more effective. So certainly this is our commitment. We're committed to long-term investment and to doing research through our Damoo Academy, among others. But we do believe very strongly that research and development should be highly integrated in order to create value for society.
So I guess the first day of trade was December 1st, 2014? Approximately. Or at least that's what Google has listed for it.
Question comes from the line
May not be exact, but
Jin Yu from New
it'll
Street
do.
Research. Please ask your question.
Hi, good evening. Hey, thanks for taking my question. Maggie, I think on your prepared remarks, you talked about reinvestments back into the business, the profits reinvestment back into the business. Can you just kind of talk about the scale and scope of kind of what that investments look like and the duration, and how we should be thinking about the rest of the fiscal year in terms of when some of these investments will hit? Thanks again.
谢谢。我的问题想问 Maggie， 刚才您在准备好的发言当中提到有一部分的利润是在投资于你们的业务发展，能不能详细介绍这些再投资的规模和范围，还有实现，然后剩下的财年当中不同的季度大概会按照什么样的一个速度来开展？
Sure. question. First of all, as you can tell that we have very strong profit generation power, right? So if you look at the adjusted EBITDA for this one quarter, we have generated over 50 billion RMB profit. So we use that part of that profit to reinvest back to develop a business, while other people use investors' money to invest back. So that's number one. Number two, in terms of to what extent, I think we got a lot of questions on, you're talking about cost control, efficiency. Does that mean that you are very cautious in terms of investing in marketing, in user acquisition, etc.? The answer is not necessarily. We are very committed to further expand not only the user base but also enhance the user engagement, but also their increase the stickiness of these users and provide them with broader products and services. So when you look at the marketing, sales and marketing costs, we're investing over like 13 billion sales and marketing in one quarter time. It's not a small number. However,
Oh, wait a minute. Oh, no, man. Okay. Whoops. I see what I did. Alright, this is really just an approximate number because, frankly, they're not actually giving us the exact precise number on the original issuance date, but that's fine. That far back in the years, an approximation will do. Same thing for here.
不好意思，Maggie， 我们听不见您的声音，你可以打开话筒吗？
Again? No? Oh, well, they actually have a pretty long earnings call. I mean, good on them. It means I haven't had to like switch over anything listening. But a lot of questions. There we go.
Operator, could you please take the next question? Operator, can you hear us?
This is Maggie. Maybe let me summarize what I just answered to James' question. With the strong revenue and profit growth, we're going to continue reinvesting.
Hold on a minute.
To these
Was I putting the ADS number in for these years? I might have completely screwed that up. Hold on.
I think our investment aims for a longer term, healthy and sustainable growth.
好，大家好，我是 Maggie。刚才技术问题，我再总结一下我刚才说的重点内容，就是说我们现在有着强劲的收入和盈利的增长，那么借此呢，我们将会进行再投资，投资于战略重要性的新的业务的发展，我们这些业务都旨在推动长期可持续健康的增长。
Okay, I see. No, they switched it. Okay.
Could we have the next
That's what it is. I see.
Thank
I
you.
see.
The
I
next
see.
question comes from Colleen.
I didn't realize that. Okay, so they switched the American Depository shares from being from 1 per ordinary share to 1 per 8, and they did that in 2019. Okay. So that's why it was looking so weird. I see now.
If maybe you could talk in a little more detail about the platform's opportunities in that market.
Okay.
And then secondly, looking at the gap between the mobile MAU.
So make sure you get that depository to ordinary share ratio correct. Yeah, okay, that makes the market cap in RMB make much more sense.
Over time to engage those mobile monthly users that are not yet active customers. Thank you.
15.
谢谢也祝贺你们很出色的一个季度业绩。我也提两个很短的问题。第一个问题呢，就是刚才 Daniel 提到公司在印度战略的一个调整，能不能稍微展开介绍未来你们的平台在印度市场有什么样的机会？第二个问题呢，就是我们注意到这个移动端的月活跃用户它和这个零售平台上的这个活跃买家的这个数量之间这个差距的这个拉大，那是不是意味着有机会可以更好的来与这些还不是买家的这个用户进行更多的互动？
Right here, we can switch this back.
First of all, as I said, we decided to stop operations of UC Web and other innovation initiatives in India after our business review. And we believe that globalization is our long-term strategy, but in near term, I think we are closely monitoring the change of the geopolitical environment and also the national policy of other countries, and we will adjust our strategies according to this change. For the second question, I would say today our MAU and AAC still have a very strong growth given we have such a huge size of consumer base in China. But I think the most important thing is that we have people engage with us. That's the starting point. And if you look at our historical number, you will see that the longer people stay with us, the more spending
Wait a minute.
They will do,
Hold on.
the more consumption they will do, and the more categories they will consume. So we will continue to engage with customers and to
visitors, the new customers into our royalty buyers in the long run.
好，像我在发言当中所说，我们是经过对相关业务的
Did I skip one?
决定
I may have skipped one, did I?
呢停止我们 UC
Hold
Web
on.
还有其他创新的业务。那么
Turn
全
myself
球
up
化
here, hold on.
是阿里巴巴长期的战略，但是我们也要去看当前环境的变化，包括地缘政治环境的变化。
This is 2013.
它的国家政策的一个变化，那么相应的呢，我们会调整自己的这个。
Which is fiscal year 14.
那么第二个问题，实际上我们的 MAU 还有 AAC 这个数字都显示出有快速的、强劲的这个增长，尤其是考虑到我们本来这个用户的这个基础规模非常的庞大，但是最重要的还是人们与我们平台的一个互动。那么从我们的发展的历史来看，人们在我们平台待的时间越长越多，那么他会消费越多，而且他消费的品类会是越多。所以
Yeah, missing 16.
必须来和我们这些用户呢做好互动，让用户呢长期成为我们的有忠诚度的高频次的消费者。Next question, please.
We are now going to take the last question. Your last question comes from Piyush Mubayi from Goldman Sachs. Please ask your question.
Thank you for taking my question. And congratulations on a good set of numbers. May I just take a step back and look at COVID? In the aftermath of COVID, I wanted to understand from you if there were specific areas that you saw an increased opportunity emerge, and would that lead to a change in tactic? We did notice that your 618 period, you were much more aggressive, and it bore fruit very, very quickly for you. And we wanted to understand if those two can be read together, and we can see an emergence of potentially a much more aggressive stance from you that would bear fruit over time.
I think March 21. Fiscal 21.
好，这是最后的问题。我想还是问一下宏观的方面，就是疫情过后你是不是认为有哪些特定的领域会有更多新的机会这个增长更好一些机会？如果有的话，你会不会相应的调整一下你们的一些策略？比如说这次的618我们看到你们有些做法呢做得比以前更激进，那么是不是也说明未来的一个新的一个做法
？Well, I think this pandemic changed fundamentally people's lifestyle and change how enterprises work. And if you look at the consumption sector, I would say after the pandemic, people care more about the health, and that's why we see the healthcare categories grows very fast. But I think that's not all, and we do see a lot of increasing opportunities in FMCGs, in new brands, and also in
here's where I skipped the year.
Many sectors. And also from the retail perspective, I think all the retail operations moving to the digital sector. I mean, move to digital operation. So how to leverage the power of our new retail infrastructure to help these merchants to serve their customers on a local basis. I think this is a growing opportunity. And the cloud, we said many times, and cloud is a big wave, and we are still in the early stage in terms of the fast growing. And I think 618 is as a mid-year campaign is part of our annual operation, and we think we take a right approach and to meet the demand and emerging demand of the consumers. I think post-pandemic, and also meet the demand of the suppliers who want to sell more products and deliver more services to their customers.
So we are happy to see the good results, and we will continue to create value for both our
Mikey,
customers
chill.
and merchants.
这次的疫情深刻地改变了人们的生活方式以及企业运营的方式。先看消费，当然在疫情过后，人们对这个健康品类更加的重视，因此的话呢，在健康这个品类我们看到增长变得更加的快速。但是远远不只是这样，我们还看到很多很多快速发展的机会，包括在快消品新的品牌，还有其他很多的领域都有这样的机会。在零售这一方面的话呢，现在所有的零售的各种运营都在进行数字化的升级。那么如何利用好我们阿里的新零售的基础设施，帮助商家可以更好的为本地的客户提供更好的服务做好运营，这也是一个巨大的机会。那么第三个巨大的机会，我们也一直在说过很多次，就是云业务它是处在发展的初期，而且未来这个增速一定会是非常的快。那么说到618，这个是我们年中的这样一个活动，它也是我们一年的总体规划当中的一个部分。我们认为呢，我们这次采取的方式是正确和恰当的，可以很好的适应消费者他们新的一些需求，也可以更好的服务商家他们的需求，他们希望能够卖更多的产品服务给到他们的目标客群。所以我们很高兴看到这次取得了良好的这个效果。未来的话呢，我们也会继续来为我们的消费者以及为我们的商家来创造更多的价值。
Yes, Piyush, as you observed that during this June 18 shopping festival, we together with the local government and together with our merchant partners has invested billions of RMB in consumer coupon subsidies to stimulate domestic consumption. And you asked whether we're going to continue the aggressive investment or we can. I think I would put it this way. We'll be aggressively invest into the business to expand our market leadership. At the same time, we also want to invest smartly, aggressive and smartly. Smartly means that, we're aiming to in long-term sustainable growth rather than just, temporarily acquire customers and GMV. So the investment going to be focused on user-based growth, also engagement, also retention, also by being smart. It also means that we're going to leverage the resources from the whole Alibaba economy, which includes us and together to grow our business. Thank you.
好。那么像这次的618当中，您也看到了，我们是联合地方政府和商家，投入了几十亿元，给消费者呢提供了消费券，以这种补贴的方式来刺激国内的消费。那我们会不会继续做大力的投资？答案当然是我们会继续的大力投资来提高我们市场领先地位。但是我们也是做聪明的投资，是大力而聪明的投资。意思就是说，我们要推动长期可持续的高质量的增长，而不是来刺激短期的获客，短期内推 GMV 的增长。因此我们的投资会集中在这个增长用户数规模，提高互动，包括这个客户的保持维系。聪明的投资还意味着我们会利用所有系统中的生态系统中的各种资源，包括我们自己的资源，蚂蚁的资源，共同合作来提高我们的领先地位。
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect your lines.
Alright, well I was hoping to be done by the end of the call. We're almost done. Just need to finish up this one and then go back and do the 2016 numbers that I accidentally skipped. But, so I would be basically about done if it wasn't for that, but oh well. Part of the benefit of doing all this manually is that, yeah, you might make mistakes, but by the time you get through it all, you'll realize it all, because something just looks wrong. I'd much rather do it myself and occasionally make mistakes, but at least be able to realize it because I did it myself, than not do it myself and not know when there is mistakes. Wait, what the hell? Didn't I copy that over already? Oh man, this thing's killing me. Did I just... Did I... lose my mind? I thought I copied this over already. What? I don't know. Shit. Lose my shit. Okay, so I was just screwing this part up. Put that in there. Damn it. Probably did. Okay, so that's done with the 2014. Now we just have to go back and do the 2016 numbers that I skipped by accident. That'll be good. I also got to sort of double check this bit up here because this needs to be just a second. Seven five. Oh, then this one. Yes, we gotta switch that one out. And find oh. Been it, right? Oh, no, my bad, my bad. There we go, and that's why it's not purple, because I never clicked on it. I missed that one. There we go. There's the one we want. Believe. Hope so. Please let this be the one that we want. Right. There we go. Fits nice and snugly in there. No problem. And breeze through this quickly. Hopefully making no real major mistakes. Gotta get ready for work soon, so. That's a lot of investment income for 1 year. Sweet, got it in the first go. Smaller, but still pretty significant investment in 2016. Significant share repurchases in 2016 too. Interesting. Alright, let's get this balance sheet for 2016 done and we will be finished with the financials. Assets are good. Payables. Current asset or current liabilities, my bad. All right, we are done. That took a minute. Whatever, we're good. I'm gonna go grab fault risk spreadsheet information. Need that. All this. Get everything. Don't pay attention to that yet. We're nowhere near done. Yeah. Okay. So, unfortunately, in their annual report, they didn't really give us geographic information that was very useful. So I just went ahead and used the global equity risk premium, which is 5.56, adjusting it for my update ratio 1.02. So 5.66 is an updated equity risk premium that I'm using for them. And they have pretty low debt to equity ratio in the most recent year, between 3 and 4, depending on how you calculate it, really. So that, and I have a unlevered beta for their industry groupings, which is a little bit complex because of the very, very odd spread of business they're in, but it actually comes out to close to 1, in my opinion, 1.01, which if you adjust for their debt to equity ratio, comes to 1.04, which gives me a total risk premium for them of 5.88 on top of the current US Treasury. That gets me a cost of equity of 7.45%. They have book debt at the annual report of, unfortunately for 2020, not 2021, of 123.656, because they actually haven't released the 20F filing to the SEC. The only annual information for the 2021 fiscal year is on their report, their release, which doesn't include in-depth debt information. So we're simply just going to roll with this and adjust the debt to equity spread upward a little bit in the future to take into account the extra debt they issue, because they did issue something like 20 to 25 billion dollars in that year. It should be closer to like 150 at this point. So I'm aware of that, but we're just simply going to have to adjust for that in our own thinking, which we're going to think about what we want to do with this. I think, I don't know, It's hard to say exactly where I'm going to put this, but maybe up like 10% on the upper end of the risk spread, maybe 5% on the lower end. That might be pretty good, and maybe 6 or so for the analyst number might be about good. Either way, that's the way it is. Considering the spread of businesses that they're in, you would actually expect them to have sales to capital ratio of 2.07 perhaps, with net margins of 10.91. So it'd be a relatively high sales to capital ratio with a relatively low net margin. They kind of have the opposite situation for them. Their sales to capital ratio over time is pretty low. It was higher before they went public, and then it actually went down once they went public, and when it continued to go down until 2016, and then it started to climb back up. Now it's up at 0.69, which is still low. Being below 1 is generally what I consider to be low. We're going to use 3-year average for the base year. And so that just is what it is. We assume maybe in the worst case scenario they go back down towards 0.5 or so, and then maybe on the upper end of things we assume maybe they go towards 1. That puts them at a midpoint of 0.75, which is, I would say, still generous to them. And then we'll do the same thing with the analysts, leaving it sort of in the midpoint there. But that's sort of where we come for capital efficiency for them. But like I said, I've said many times on my streams, these things usually balance out. As we could say, their industry sort of expects them to have a high sales to capital ratio with a low margin, but they have the opposite. They have a high margin, roughly. They have, in the most recent years, 25%, 33%. 29%. This is an adjusted net margin, adjusting for R&D and amortizing it back. Their GAAP margin, what is their GAAP margin? GAAP margin is 20, 29, 23, 25, versus my adjusted one is 25, 33, 29, 30. So you can see my adjusted margin is higher than the GAAP margin, but either way it's higher than the industry expected, which would be 10. And the 10 is roughly the same sort of margin I'm using, the same adjusted. So they have 25 currently versus 10 in their industrial grouping. And that makes up for the fact that they only have a 0.75 sales to capital ratio compared to the 2 that would be expected for their industry. So these things tend to balance themselves out. So it's no big deal, really, that they have a low sales to capital ratio because they have high margins. So as you can see here, like I said, they have, over the last 3 years, an average of about 29.5% margin, and I'm going to go ahead and roll with a 3-year average for most of my base year positions. We'll do the same thing for their tax rate. Their tax rate in the last 3 years has been 14%, which you would expect it to climb over time, but maybe it will, maybe it won't. It's hard to say. I'm going to go ahead and just leave it at the 14%. And also their 3-year average cost of debt has been 3.5%. Versus the book listed debt ratios at least a year ago of 4.1 or so. It's possible they did bring it lower a bit, but probably not that much lower. But we'll go ahead and leave it at the 3.5% for them. And as far as the margins that I'm going to expect for them, like I said, they've kind of had this range of 25 to 30. In the most recent years, it was higher in the back period, but that doesn't take into account the adjustments that we made for the amortization of R&D. If you look over at their GAAP margin, you can see though that it still sort of had the same thing, where there was some pretty high years relative to the later years. So the margins have been compressed a little bit over time. So assuming that the margins go up is perhaps a little bit bold. So we're probably aren't going to assume that necessarily. Ignore the numbers I have here at the moment. We'll assume maybe on the worst case scenario it drops to closer to 15%, and on the higher end maybe up to 40, which would put the midpoint at 27.5, which, like I said, considering that they're sort of on a somewhat downward trend with their margins slowly, I'd say that's a pretty fair assumption to make. And we're going to go ahead and probably leave the analyst number around the same spot. Analyst EPS growth is expected to be 17.1%. That takes buybacks into account. Analysts are also expecting them to grow 30.6% in the next year, and also 20.7 in the year after that. Which, if we assume that it goes sort of towards steady state a little bit after that, which is probably conservative, but if we still sort of assume that, that would get them close to a 10.5% revenue CAGR over the next 5 years, which, like I said, is probably understating it because they're not likely to go into steady state only after 2 years. So if we can assume maybe the analysts are expecting perhaps about a 15% CAGR for them in revenue, and that would get them to here, what was it, 17.5, 17.1. So with the margin that we actually have right here, that actually makes perfect sense for the net income growth that they have right here, but that would sort of assume that they are not actually making any buybacks at all. So it's actually possible that this should be a little bit lower on the analyst expectations. Maybe 25% is what the analysts are assuming, because that would make a little bit more sense in line with the EPS of 17%, because this is net income, not EPS. But we'll go ahead and be a little bit generous to them and actually just leave it at that 27.5%. Maybe I might reverse that. We'll see. And then for my own analysts, or for my own revenue growth expectations, I think that it's probably reasonable to assume that they might be go higher than sort of what the analysts are sort of implying, of around 15%, maybe closer to 20%. And so in a midpoint of sort of around that, let's say maybe in like a worst case scenario, maybe like only 5% CAGR, and closer to maybe 40% on the upper end of things, which would put it at 22.5% in the midpoint. It's worth noting that in their own guidance, they're assuming 93 billion RMB in revenue for fiscal 2022, which is what this first year is. So that's what they assume. So it's possible that we are understating it by doing that. If we put up here, that would put their own guidance to be between these two figures, which I think is pretty reasonable to assume. That basically says that, because like, I don't know, I try to put what the company believes often in sort of the midpoint, putting them maybe on the generous end. We could also say maybe it should be a little bit higher. That puts it a little bit closer. If I was going to do that, though, I would sort of almost want to do this. Yeah, the average between these two numbers is 940, so that puts it in between the middle case and a somewhat bullish case, but actually slightly closer to the middle case for what they're guiding. That's, I think, pretty reasonable. But on that case, maybe I'm understating it on the analyst side. No, we'll probably leave it the analyst number where it is, but maybe even just push this a little bit higher. Maybe not. I don't know. That maybe it's a little bit too bullish. Yeah, I think I'm okay with that. Because that's not just about getting their expectation to be correct for 1 year, because they're only assuming that. That doesn't mean it's going to CAGR for the same rate for the next 5 years. Just because you get growth of really high in the first year, it's much more likely that they would have high growth here, slightly less growth here, slightly less growth here, and then it would trail outward. But we're trying to come up with one consistent revenue CAGR that's consistent. So I'd much rather undershoot their expectations, essentially, because it's unlikely that they're going to sustain that same growth through all of those years. It's more likely that they would get the high growth up front and that they would trail out a little bit as it goes. So I'm actually probably okay with just leaving it in this range. Could be off. It's worth noting that this is what their revenue has been for the last 5 years. 5 years back from 2019, 48%, 46%, 47%. So maybe not. That's arguable. Maybe we can put it back at 50. non-cash returns on invested capital of close to 12% on top of the what's it called, the cost of capital of around 6.8 to almost 7%. So that gives them excess returns on their capital invested of about 5%, which is, positive, pretty decent. Not crazy, but positive. All positive in that number is good. Probably too high to assume. This company definitely looks like it would benefit from having a much larger amount of debt issued. It's funny. It's really funny. A lot of the most successful companies, a lot of the ones that really seem like they have the highest growth opportunities in front of them, applies to like Amazon, Apple, Microsoft, all the big FANG stocks this applies to. But it looks like it applies to Baba as well. It's like they all seem very hesitant to issue more debt when really that debt would actually help them. It's very, very interesting. It's like for a lot of companies, having too much debt is a drag on them, but not having enough debt is also a drag, and that's something that a lot of company management doesn't seem to understand. They're scared of it, which, fair. Having no debt is not going to put you out of business, but it is going to hamper your returns. That's the point. It's because you're telling the equity investor that they have to pay for all of the growth rather than splitting that payment between debt and equity investors, because the point is interest is cheaper than the cost of capital, and that's pretty much always the case. See, it costs them about 4% to pay for debt, but it costs them in the long run about 7.5% to pay for equity. So it's cheaper to pay for debt. It's just risky because that increases the beta, and so therefore it increases the required return of the equity investor the more debt you use. But there's a balance point between those things, and for a lot of companies, a lot of young tech-focused companies, they tend to not issue enough debt. Partially, it's like a cultural thing. It's like a cultural thing amongst tech companies. Silicon Valley is like all about not having huge amounts of debt, and often it's a cultural thing in a geographic sense too. I don't know if that applies to Chinese companies in a general sense because I've only valued like 3 of them, and I'm pretty sure one of the 3 this didn't necessarily apply to, but I know it applies, for example, to Japanese companies. Japanese companies have been sort of shell shocked against having high amounts of debt ever since their debt crisis that they had decades ago. So it could be that that's the case for them, but it also might be just like a Shenzhen cultural thing too, since they're kind of like the Silicon Valley of China. So who knows? Maybe they sort of have a similar culture there where they're just like almost too good for debt in a way, but from a corporate finance theory perspective, that's just not smart. You should issue more debt. I don't know what the correct percentage would be for Baba, but it might be closer to 10%, because 10% would still be a really low debt to equity ratio. The fact that it's only 3.5 or so, or like I said, it's probably closer to 4 actually, because we kind of had to make some assumptions based off the fact that we couldn't get accurate debt information in the most recent year yet. In fact, we actually can get that in probably about a month, because that's when they're going to file the 20F filing with the SEC, and so maybe I can update it then. But like I said, I'm sort of trying to input that make up for that assumption in here. They should issue more debt. If they issued more debt, it would probably make their value go up, which sounds counterintuitive to a lot of people, but it's the case if you have too little debt. Let's see. And trim that back since we pumped up the revenue assumption for them, but maybe I don't want to pump up the revenue assumption for them though. Just on the analyst number, because I am trying to leave a pretty high spread for their for the revenue growth on my end, but for the analyst number, I think I do want to leave it more in line with the implied number. What I will do is I'm going to pump the probability distribution a little bit towards the positive end of things, though, because I do think that they're more likely to do probably in this range. I just want to leave these ranges in here in case there's some outlier factors. And I'm perhaps willing to, like I said, pump this up as well a little bit. Zero is probably a little bit too rough of a floor for them. 5% is probably a fair worst case scenario for Baba. Because I would say in the Chinese market, the worst case scenario is not so much that the high end of the market, which is what Alibaba is part of, would start to fail. It's probably more of a worst case scenario where the low end of the market starts to fail, and therefore everybody's going to keep buying off of Baba. Probably. It does make me maybe want to put the margin worst case scenario downward though a little bit to make up for that. I think that's much more likely to be a possible worst case scenario, because like I said, the margins are coming down slowly. And in the most recent year, it was 25% versus 33, 29, 30, 34. Which, like I said, because of the R&D adjustment, it can be skewed up a little bit harder to see, which is why you sort of want to compare it with the gap margin coming down. The gap margin is consistently coming down, so you want to think about it that way. Either way, because our mid case still comes up to be 25, and like I said, we're still leaning into the positive end of things, so I think that's still good. Thank you for the good question, Dr. Crisis. A lot of people's valuation, you often see them adjusting share count based off of the buybacks that are expected to be done. It's a very good question to have, but what it needs to be understood is the difference between present and future value, which I'm sort of looking at both in a certain sense, but and the overall calculation of the valuation is just about coming up with present value, which is what you use the discount rate to come up with. And so the present value, you should be only using the current share count as most accurately as you can, including as diluted appropriately as you can using RSUs and options as well to get the appropriate share count. But it should only be the current share count to come up with the present value. If you're trying to come up with an extremely accurate 5-year forward or a 10-year forward future value, then that can be taken into account. In my particular case, I don't actually do that with this particular number here. I essentially, what that means is I'm essentially assuming all the cash just piles up in the company, because I also don't assume that they pay any dividends for the same thing, because what you would theoretically have to do is do both. If they were doing share buyback and if you wanted to come up with an actual accurate price target for the company, then you would have to essentially subtract out expected dividends over the time frame, as well as take into account expected share buybacks. But the point is I think of both of those things as ephemeral and uncertain, because the company can suspend those programs or cancel dividends at any time. And so what I have this number here is not a price target for the future, which plenty of people do try to present price targets for the future, and they will often take future share counts into account when they do that. This is a value target, which is what I'm saying is it's the total amount of money you're likely to collect over the time frame, at which point it doesn't matter if it comes in share buybacks, it doesn't matter if it comes in dividends, and it doesn't matter if the company just stacks the cash up inside the business. This is the total value that the shareholder will accrue during that time frame. So it's essentially my way of taking an agnostic approach towards whether or not somebody's going to do share buybacks or not, or pay a dividend or not, or increase their dividend or not, or whatnot. And because the thing about share buybacks is they can be both positive and negative too, and that's something that has to be taken into account. Share buybacks are only good if they're accretive to value, which means that the company has to be undervalued in the first place, which means that by buying the shares, they're essentially making as good of an investment as the equity investor is by buying the shares themselves. So if a company buys back their own shares when they're overvalued, for example, then that actually can be damaging to their value, because they're essentially buying a poor investment. You know, it's like it does lower the share count. Most people think about buybacks as being only good because it means that that's lowering the share count, which means it makes the EPS go up. But EPS on its own doesn't mean anything, because, for example, my valuation has nothing to do with a PE ratio, so EPS doesn't really matter. What matters is what the company does with EPS. And so share buyback, long story short, share buybacks can be both positive and negative. More often than not, they are a positive. But the point is there are situations where they can be a negative. And so I try to take an agnostic approach towards them, since I can't tell whether or not they're going to be positive or negative for them. Right now, it looks like Baba, we're not quite done yet, but it looks right now at the moment that Baba is undervalued. So it looks like it would be good to do share buybacks for them. But who knows? Maybe in the next 6 months, Baba completely shoots up through the roof, and then they keep doing share buybacks anyway, and then that would make it a negative. So the point is it just because the company tells you that they're going to do $5 or $10 billion of share buybacks over the next 2 years or whatever, there's no guarantee that that's actually going to be a good thing or a negative thing for you. So I'm going to assume that they do no share buybacks, and they instead are just stacking the cash up. That's what this COGR number that I basically make most of my investments off of right here. It's the yearly return for the next 5 years figure. That's what that means, in my opinion, is it's all return. It's whether it's price appreciation, dividends, or buybacks. It doesn't matter. All of that's in here, essentially. It's my best estimate of what they can provide as a total return, regardless of how they choose to provide that return. But it's a good question. People do ask that
often enough, and because you'll see lots of other people who do valuations based around PE ratios as a terminal figure. They often include share buybacks when they do that, and I personally think that using a PE ratio as a terminal value is not the correct way to do valuation. But if you are going to use that, then it actually starts to make sense to take future share count into account. But in my particular case, I don't do that. I look at it as too uncertain, essentially. So I'd rather just think about the total potential return, agnostic about how it comes. Because I don't care if they pay me dividends. I don't care if they do buybacks. I don't care if they reinvest all the money into new investments. I just care about what the return is. So that's the long answer to that, Dr. Crisis. Thank you for subbing. Anybody else who is watching and has not subscribed, please subscribe and like. It looks like we are pretty much about done here. I'm not sure there's too many other adjustments I want to do. I think I'm relatively pleased with the assumptions I have in place. I think we're somewhat generous to them in this space. Maybe I'll push down the analyst number on that one a little bit, but that doesn't do much to them, because I don't know. I am pretty confident in Baba's ability to expand, so I'm okay with being relatively optimistic on their fundamentals. Like I said, it's like they've kind of had this downward move in the sales to capital and then come back up a little bit. And so it's possible that coming back up will continue. It's a slow movement, and it tends to be a slow movement for sales to capital ratios. So I wouldn't push it up further than that necessarily. But like I said, even though that number is relatively low, it's balanced out by their relatively high margins. So that's a pretty good point for them. And I don't really want to push up my distribution any more than just giving them the little boost that I already did, but I think that that's fair. But I do think I am being generous to them. Partially just because, like I said, I'm taking into account their own guidance for revenue, which still puts it into the optimistic range of things. But I mean, if they're right about getting $930 billion in fiscal year 2022, well, then that puts them, like I said, a little bit above the mid case. And if they've already achieved that, then that kind of makes it easier for them to perhaps grow a little bit further. It's hard to say. So the only thing left to do at this point is adjust for default risk, which I've already seen is pretty low for them. Pretty low. They already, for example, have 320 billion won, or yeah, 320 billion won on hand, plus another 162 billion in short-term securities. And they have other securities too, but we're only going to look at the short-term ones. So that's quite a lot. It's effectively enough to pay off all their debt. I mean, we've seen their debt to equity ratio is tiny. They have way more cash than debt, which makes me feel pretty confident about them being just fine. I would say that I'm only going to actually even pay attention to the default risk on probably the lower three cases, but I'm going to, or actually probably going to include the analyst too, but on the top two cases, I'm just going to go ahead and leave it at 0% and give them that kind of boost, at which point in pretty much all of these, they're still above the general spacing. How I estimate default risk is looking at the interest coverage ratio, which is earnings before interest and taxes over their interest payments, which is what this number is right here. And then I compare that to a data set that I have that I get from Professor Aswath Damodaran. You can get all of his data off his website. Basically taking an average spread of what the companies are between certain interest coverage ratios and estimating what their rating ought to be according to the rating industries and what the average default spread for those ratings are. So instead of looking at what their actual rating is, we essentially estimate our own rating for them based on their interest coverage ratio, and then we estimate a chance of default for them based on that. And this is a chance of default per year, just so that it's understood. These percentages right here. But like I said, in pretty much all cases, they end up on this lower rung because they have way more cash than debt, pretty significant cash flow, and an extremely small amount of debt. So it's not really going to take much off of them, but it will take a little bit off of them. Like I said, we're going to leave those two best case scenarios at 0% just because they have that much cash on hand. But yeah, so it chipped it a little bit, but barely, honestly. So yeah, I think that's probably it. We calculated everything in RMB, Chinese yuan, whichever way you want to say it, and then we do the entire present value in that currency as well, and then we convert to USD after the fact, and then divide by the ordinary shares to get to the per ADS number, which is what we do have up here correctly. You can kind of go about valuation of foreign companies in multiple ways, depending on if you can get the numbers. But it's very important to make sure that when you do a valuation of a foreign company, that you're extremely consistent about currency usage and making sure you get the ADS spread correctly. I did get the ADS spread incorrectly on like some of the previous numbers in the past, which wouldn't have made a huge difference because it was just the past historical numbers. But either way, even so, I got tripped up on that because it's like 2018 or 2017, they switched their ADS ratio from 1 to 8, which is interesting. But either way, so I think this is pretty much my best guess assumptions for them. Huge growth potential, it looks like. Yeah, pretty impressive. Current market return that I have for the S&P 500 is roughly 6.375% for the next 5 years. Based off the risk profile that I have for BABA, I come up to a discount rate of 7.46%, which is a cost of equity discount rate because I do a free cash flow to equity DCF over a free cash flow firm DCF. They do not pay a dividend. 5 years ago, they had sales of 101 billion won versus in the most recent year, 717 billion won, which gave them a sales growth of 47 to 48% per year, which is pretty impressive. They have sales capital ratio most recently of 0.65, which is not very impressive compared to what we would expect based off the industries that they're in. We would expect them to have about 2.07. Though it's worth noting that that takes mostly U.S. companies into account, so it could be skewed based off of the data set that's involved there. But however, that is balanced out by the fact that they do have a significantly higher adjusted profit margin compared to the same sort of grouping expectations that we have. So those things tend to balance themselves out for most companies. They do have a pretty significant return on invested capital of close to 12%. Which has come down significantly from where it was 5 years ago. And oh wait, hold on, that's not. Oh, never mind, my bad. I thought that was something there. Their debt to equity ratio is extremely low at 3.45%, and they have a basically almost non-existent default risk in the most recent year, which obviously they didn't default. But the point is they weren't particularly at risk of it in any sort of sense. They had profit of about 180 billion won. That's an adjusted net profit, not GAAP net income. So it's adjusted for capitalized R&D and then amortizing that R&D away. And then they're currently selling around $215 per share. Our probability distribution for them is roughly a normal one, but we did move a little bit of the probability from the middle case into the slightly more positive case. So we are slightly bullish on their overall performance relative to what the overall spread of things that we're including. But either way, that gets us a distribution of possible revenues anywhere from 915 billion won, which would still be a 5% growth per year, to possibly the high end of 5.4 trillion won, which would be 50% revenue growth per year for the next 5 years. We distribute that overall to come up with about 2.4 trillion, which would be 26% per year or so. Sales to capital ratio comes out to be 0.75, which is pretty bullish, assuming that they will allow that to grow back up. It's possible that that's one of the things that I'm being too bullish on, even more so possibly than the revenue, is perhaps that it actually just stays at that 0.65%. But if you do bring down that 0.65%, it definitely would bring their returns down, but it wouldn't bring it down crazily. Maybe it would drop it to, like if we put it to made the expected value come down to 6.65, it might make it this about maybe 15 to 16. So it's like it would probably shave a few percent per year off of them, but probably not a crazy amount. But we do essentially assume that their returns on invested capital are going to significantly climb from where they are at the current level, which is pretty impressive if it does happen. And then we are also assuming that they issue more debt. That's one area where we are also perhaps being a little bullish on them, because like I said, they don't have enough debt. And so whether or not they ever actually figure that out is a big question, because that also assumes that their market cap is going to significantly grow over this period. And this is a market debt to market equity ratio, not a book debt to book equity ratio. And so for this to occur and for their market cap to go up, they would have to issue a significant amount of debt. And if they choose to try to get the same level of revenue growth without issuing that debt, it could have a significant impact on their value, depending on a few other factors. But overall, we do expect them to not have much default risk because they do have such a low debt to equity ratio, less than 1% per year for the next 5 years, which is pretty great. And then we assume that they will have their adjusted profit margin compressed a little bit over that time frame from around 29.5 to possibly about 25.5 or so, which isn't significant, not a crazy amount, but it is compression. And then that would give them a adjusted profit on an expected basis of about 701 billion won in the 5-year forward year. And that gets us at the discount rate that we're using, a present value of $352 per share or so, which is 64% up from the current price. And like I said, we have 5-year forward value targets, which don't take dividends or buybacks or anything into account, of anywhere from $76 per share all the way to $1,700 per share. But on a distributed basis, we get to about $504 per share, which would give us an expectation of them achieving about an 18.65% return per year for the next 5 years. Let me check. Okay, make sure that's correct. On multiple regression, we would assume that they would end up having a suggested price of $215 per share on short-term multiple regression, which is basically just a short-term pricing metric based off of market expectations and using a statistical regression of multiples. So I don't really make investments based on that, but based off this, the price is accurate, which could explain why the price is what it is that the market is more likely to make their decisions based around these things than otherwise. And so that's very possibly why the price is so low as it is that the market sees it as closer to being worth this based off of these fundamental measures, which in my opinion are, like I said, this is something the market looks at, but it's not something that is usually accurate. I make my investments based off of this. So the market is very possibly wrong, is basically what I'm saying. So yeah, that's BABA, ticker BABA, Alibaba Group Holdings, Chinese company, American ADS share. But yeah, so looks like it could be a great investment. I'm definitely very tempted, having found what we found here today. It's a pretty significant return. I generally like to think about this number as multiples of the market return. So like I said, the market I'm expecting to see 6.375 or so, and they're expecting to do almost 3 times that. So I would expect them to outperform the market by a factor of 3 or so over the next 5 years, and that's pretty great. That's pretty significant. So definitely nothing to sneeze at, no matter how you feel about what assumptions I put in here, whether they're too high or too low. I definitely think that it's it's a pretty great return. Even if you shaved off a decent amount of revenue growth and also shaved the sales to capital ratio back, and also assumed that they didn't issue the new debt like they should, and also compress the margins a bit more, you would have to do quite a lot to make this return go below the market return. Which, I mean, you could if you're trying to be extra conservative and you're not nearly as bullish. But either way, it's a pretty impressive set of assumptions and a pretty impressive return that comes out of it. So yeah, that's going to be it for today. I hope you enjoyed, everybody who's watching, and if you are not subscribed to the channel, please subscribe. Like the video, share it around, comment below, whatever else, your criticisms, your comments, your support, whatever it is. If you leave constructive criticism, I may even take it into account into future valuations. You can also leave suggestions about what I would look at next. I might take that into account too, though there's no guarantee. But if you also show up early enough in the stream and give suggestions, I might take them as well. As Dr. Crisis was putting his question here on Twitch, I was more than happy to get specific on my thoughts surrounding that. Which I see you asked another question. No, I actually have not ever used Taobao. My first kind of introduction to Taobao was looking at their stuff over the last few days before doing this stream. I've never actually looked at Taobao, so maybe I'll have to check it out. But I kind of just was not really making overly huge assumptions about that part of their company in specific. More just kind of looking at it as over a more high-end top-down look at Alibaba, not necessarily doing like a sum of the parts type valuation per se, which is what some people do. But either way, yeah, so that's going to do it for today. Hope you all enjoyed the stream. Like I said, like, subscribe, all that jazz. Catch you all next time.